Hey guys, just want to do a quick update on AMC. We had a really good day today. It was nice to see some green, but I'm not overly optimistic about the price action for the future. And the reason is we've had multiple days like this where we've had um, near 30%. I don't think we're not at 30% yet. We're at right about in here. We had a 30% day. It probably will get up to around 36. Yeah, 36.50. So I think the top is, for me, I'm just looking at it, it's probably around this $21, $20, 21.17, 21.20 mark. I think that's the height of this algo that's either buying or it's FTDs. Because I remember here in December, this is December of 2021. This right here, December 17th, was an FTD day. I'm pretty sure. And then we had a couple of good days after that where it extended, and the total was around 36%. So that's what I'm looking for in the same move. Now, if we get stuff that goes over that and we get up in this 23, $24 range, then I'm going to start changing my strategy up, and I'm going to have a different opinion about where I think the stock's going to go. Until then, I think it's just more the same type of movement. I'm not really overly excited about this because it basically, as long as there's enough shares to short, and that's the other problem is, let's say tomorrow we open up and there's 5 million shares or 4 million shares to sell short end of the market, and the price is right now at $20. Well, if this algo, let's say it was not FTDs, let's say it was a mixture of conditions that were met in the market and these algos, we had a really strong algorithm that bought. Well, when those algos buy, they're going to sell, and somebody that has enough shares to be able to sell short into the market can literally, is if that algo that just bought up 5 or 10 million shares and had a 30% day, it's going to have you're going to have some kind of retracement, but they can get that algo to then flip and then dump those shares. So now you get the huge, and that really is kind of what this is. Afterwards, they're getting an algo that just bought a ton. I mean, this was FTDs, but even in here, I think this was an algo. I'm pretty sure this is just the algo buying up in here. They get the algo to flip and sell short, and then you get a cascade, and then it dips down and buys. This is just standard trading right here. This is like a fib retracement. It starts here and ends here. This is just fib retracement algorithmic trading. Um, Now, if we get over that 24, $25 mark, then I would think that there's other mechanics going on besides just algos buying and selling. But I will tell you that's the danger of being able to, if you want to change the price of something, you can just manipulate an algorithm that just bought, and then you can get a cascade plus the shares that you can sell short. Um, so it's easy to. I say it's manipulation. They're just buying and selling. It's just because the market is built up of like a 5-gallon bucket of water, and whoever is the biggest bucket of water within that bucket can then move the stock as they please. I'll say that. So I'm not overly excited. I honestly think that if I look at like a basic bars pattern, you know, um, that's kind of like that's just honestly what I'm looking for, and it might not even be. Yeah, we'll put it like right about in there. Um, that's what I would look to see. I mean that because I think this is the same algo that's in here and in here that's doing the same thing. Um, because I don't, if and the other reason I'm saying this is if I'm a bunch I'm I'm a hedge fund that is short AMC, and I know that transparency is coming up and is going to cause me a lot of problems. I don't want to try to close out, start covering my position, eventually close out my position here at $18. I mean, a $11 price target is a much more reasonable one that I would try to get to if I want to start. Like, I want to get as low as possible. And I'm not like somebody, I don't think it's going to go down to like $8 or something ridiculous. I just think it would cost, it's just madness to get down there. Um, I would not be surprised if we get down to that $12 mark. I just wouldn't. And of course, if it that this does not happen, and of course we get over that $25 mark, there's a great air gap, especially after. I mean, gee, yeah, after 25, that's pretty solid, you know, and even after 30, I mean, 25 and 30 are big deals. So I'm not overly bearish, I'm not overly bullish, I'm just not. Um, I won't say that I'm going to be surprised if they tank this. Tomorrow's Wednesday. I won't be surprised if we have a medium day tomorrow and then they start tanking it Thursday, Friday, and then the next week they hammer it down for the last week of March, and then in April, you know, then they'll be ready to come back out, um, and clean their books up if they want to, if that's really even a thing. I just don't care about that anymore. The real thing I think is what is the kicker for MOAS to me is their ability to maintain liquidity, and that, like, this knee-jerk reaction here on SPY, like, okay, it's I'm not overly hyped about it. It could just be a last knee-jerk reaction before it just plummets. But raising interest rates for people that were for institutions or funds that are short on the market, raising interest rates is going to be a problem for them, I think. And it might take more and more months, more and more raises and increases. Because to me, what they did is it's not here in like 2018, 2019, they're getting plenty of money from their prime brokerages or their banking friends that are connected in Wall Street, which are getting money from the government. There's plenty of money floating around in here, and that's the problem is there was tons and tons of money, free money to go out and leverage against the market, where they used bonds, where they used other stocks. They literally used all this collateral to then short the market, and they were shorting it in this area. So all the collateral that they have, that's great. It's good collateral right now, but when SPY tanks and all these bonds that they used are drying up, you know, and then the interest, really the interest on positions that are outstanding, which are positions that are sold short, I guess shares sold but not purchased. That's a huge problem for these guys, because then you'll see this, you know, I think that you'll see this flip. Again, I'm not a financial advisor, so take everything I say with a grain of salt. But it's just a timing thing, and that to me is SPY tanking along with all these other bonds from whether it was China or from, you know, Russia, or the money getting tight, and the fact that a lot of the Wall Street can't control the price of oil. I'm sure that they would love to if they could, but they just can't, because they don't actually own the physical asset. They might own the you know, a stock, or they might have bought futures on it, or, you know, contracts, stuff like that. But you know, I don't. That's not something that they just have a hard time dealing with the price of that. So there's a lot of things that they can't control that are now out of their ballpark that are going to cause problems. And I think it's a combination of those things. I don't think it's just one of these singular things that's going to cause MOAS. Not trying to be a Debbie Downer. I just these guys have tons and tons of money, very deep pockets, and it just takes a while to you're kind of having to inverse the. It's like if they're the python, you're literally having to find a bigger python to then squeeze them out of the market, and it's hard because these guys got like a BlackRock, $100 trillion or something. I mean, they got stupid money. A lot of it's ours, or Fidelity, or a Vanguard. I just think it's funny that they were, going out and making crazy bets with other people's money, and it's Joe somebody's money that made 18 or 12 bucks an hour his whole life, and that's his life savings. Um, Either way, it's amazing what Wall Street. I guess they just think that they'll always get bailed out, and I don't know if that's going to happen this time. I mean, some people would be like, "Oh yeah, of course they will," but dude, if everything gets really bad, especially like if you get an issue where the government can't print money because China and all these Middle Eastern countries are now doing oil deals in yuan, and they're trying to destabilize the dollar, and the petrodollar is no longer, the petrodollar. They're not using that, which is kind of the backbone of our U.S. dollar, or of the dollar. That causes a serious problem. So if the government can't print money, there will be no bailouts. They'll just fall on their faces. So that's another thing I think about is you have some. I mean, I've read years ago that China and India and a bunch of other countries over there were wanting to trade oil and gold, um, which is, I believe there's a lot of other countries too that were wanting to get off of not use the dollar for transactions. So if they really do stuff like that, stuff just watch out for. Either way, enough of my rant. Either way, I'm excited about AMC. I always am. I've got a bunch of tax return money I'm interested in deploying into the market, and I guess you can bet where it's going to go. But either way, guys, I hope this video was informative, and if you guys have any questions or comments, please let me know, and I'll see you guys next time. Thanks.